Hi, good evening, everyone. I think the light is bad. Okay, I think this is better. Well, I'm outside, of course, as you can see. I'm not in office. I'm out with family, but then I thought this video should go on. So this is a weekly market pulse video where we discuss about what's happening in the market, what happened last week, and what could be expected next week. So talking about the markets for last week, markets have seen a very good rise. In fact, if you remember what we spoke in the last market pulse video, we had discussed that markets have come to a close, very good support zone. And I told you clearly that I'm not expecting big downside from that point. And that's exactly probably market happened. And market just went up and up. And in fact, it rates back close to about 19,600. So that's a great thing at this point of time, right? So, well, things are looking positive and the result season have started. So based on that, the markets are looking positive. If you look at last week, the most important data, or sorry, the important event that we were looking forward to was basically the RBI monetary policy. So as expected, RBI monetary policy was kept intact. I mean, status quo, no increase in rates, and the market actually cheered that decision, and we could see the Bank Nifty actually rallying up after that RBI report came, and we could see the market going positive. So that was, of course, a great sign. So apart from that, if you look at the market overall, things are looking positive. IT sector did really well. Well, I can't say IT is picking up, but I would say IT did see probably the short covering because IT sector has been short properly because of all the negative news coming in from the US. Of course, the Accenture news also, where Accenture results were not great. So Indian IT stocks also were being shorted. But then probably people have just covered their shorts just before the result season because the result season is coming up this week onwards, starting with the TCS results on Wednesday. So that would be the next event to look at. But before we talk about next week, I would also like to talk about other things that happened after RBI monetary policy in India. So the next important data that we were looking at, as discussed in the last podcast, was the jobs data in the US. And we had discussed that if the jobs data comes positive, that is, if jobs increased, that means the economy might see more rate hikes, and that could actually trigger a fall in the market. And that's exactly what happened in the US. The jobs data came positive, and though it is positive for the economy, but for the US markets, the fear of rate hikes again came in, and the markets just started falling down. But then, surprisingly, at one point, almost a 200 plus point fall, Dow actually started rallying up and even broke the day's high and rallied up all the way to turn positive. All the indices in US actually turned positive. That was a great sign. And I would say it is not because of the market actually recovering, but I would say this way that people now feel that probably the worst is over because the market was kind of already shorted and had already captured all these events under it at this point of time, and people probably look at using this opportunity to buy in, and that's what happened. So sorry, the major short covering because such high rally cannot come without a major short covering. So as soon as the day's high was broken in the US markets rallied up. Though I'm not saying it's a start of rally in the US, it could be consolidating for some more time. But then that has given a positivity to the global markets. So US futures are slightly higher, but after that, if you see as of now, US futures have actually come down slightly. So based on that, looks like the US markets are going to consolidate for some more time. But meanwhile, in the weekend, what happened was we also saw the war between Israel and Palestine that has kind of come in, but there was unrest for some time, so it's not a new thing. So I'm not expecting markets to react big at this point of time, but there could be some knee-jerk reaction, which we need not mind, is what I feel. But however, if at all there's a fall, we always only enjoy buying it. But then, war, whatever it says, is not good for any country or any part of the world for sure. Nobody enjoys it. I don't know why people still go for it, but then we don't have an option. So there might be a knee-jerk reaction, especially if some retailers who are new in the market think that this could be a problem. I personally don't think has a big effect on the Indian economy, unlike Russia, right? So this may not give a big reaction like Russia is what I feel. However, let us see what happens tomorrow. So basically, let's see how the Asian markets trade tomorrow morning before Indian markets open. That could probably give out some idea to us on how Indian markets could move. But however, this is why, if you remember, whenever we trade in MPI family, we always go with a hedge, right? And these kind of situations, what can happen over a weekend. And luckily, we at MPA family have reduced our position on holding, and we are sitting with some, very good hedges for every position that we are holding, which could probably take care if at all there's something goes negative. But these are kind of things that can happen over a weekend, and that's exactly why we need to be really safe on the weekend. So apart from that, if you look at this week, so like I told you, I'm not expecting big fall, but there could be knee-jerk reaction, which could probably be bottom, and Indian markets can probably recover again. So that is something that could be expected as of now. Apart from that, if you look at the market this week, so naturally the most important focus would be on the IT sector, like we discussed last week, because TCS results are expected on Wednesday. That could come mostly after market hours on Wednesday. So the effect of that can be seen on Thursday. If TCS results are good, people feel that sector has recovered, and that could actually help all other IT sector companies to actually move up. So that could be on focus on Thursday on the expiry day. So be careful on this expiry. Apart from that, the most important thing to be looking at is the SDFC Bank result, which is coming on Saturday, but that will be after Indian markets close on the Friday. So we would be discussing about it in the next Sunday's market pulse. The effect of that can be seen on the market on the next Monday. So because of that, of course, if you see last few weeks, HDFC Bank has been going negative. So that maybe, and if you see there was a small rally last week, but still, if there are people short, they may actually try to cover the position before the result. So we might see some positive movement in HDFC Bank as well. So for this week, like I told you, the major focus will be on the IT stocks, and of course, Infosys and HCL also will come out with the results. And apart from that, HDFC Bank for the banking sector. So these are two sectors which could be on focus for this week. Apart from that, this week, if you see, the major focus would be on the data that comes in. That is, since a new month has started, the CPI data is expected on Thursday for the US as well as India. So that could be a point of focus. But apart from that, if you see, there is also the Federal Reserve meeting minutes, which is going to come out this week. That is on coming on again Thursday. So that could be another thing on focus, because what are the expectations is something that people would be waiting for. So these are things that could look at. So this week is going to be really moving up and down. The markets can, the movement in the market is highly dependent on the results that's coming in. That will be for this entire month as other major results come in. So majorly the results like HDFC Bank, TCS, SBI, Reliance, so ITC. So all these stocks are going to make big movements. So the next 1.5 months are going to see the markets going all the way positive to minus. Anything can happen based on the results. I would be majorly focusing on how these companies' results would be coming, but that could help us understand how the future movement could be. However, I'm not expecting markets to correct big, because Indian markets have corrected decently and taken a good support. So even if the market kind of takes some pause here at this point of time, we could see the market kind of trading between 19,000 and 20,000 for some time, probably about a month, unless something major comes up. This is how the markets can actually react, right? So based on this, the market, like I told you, this week focus would be on these results, and expecting the market to be in a consolidation mode with high volatility. So that is something that you need to be careful about. So again, I would say newbie traders, stay away from the market. Not a great time to try your trials. But yes, consistent investors, stay invested and reap the benefits if the market goes up, and just add stocks if it goes down. It's simple as that. So that's it for now. I think, yeah, let me get back to family. It was a short video where I could give out the details. I thought I should not miss this, though I'm missing the MPI weekly meeting for today. Uh, so that's it for now. If you have any questions, do put it in the comment section. We'll answer that in the next podcast. But before that, if you love the content that we share, and if you, of course, you want to motivate us, the only thing you can do is press a like button and share this video. Uh, of course, we want to keep this dedication on the market pulse video, so that we are all updated with what's happening in the market. So that's it for now. This is Srikant Rajan signing off. Until we catch up on the next podcast tomorrow morning with more details on what could happen tomorrow in the market. So based on how the markets would go, right? In the Asian markets tomorrow. So goodbye. That's it for now. Let me see now how to end this live because I'm not used to doing this from the car. Goodbye.